Pi Network is entering dangerous territory. Its token, PiCoin, has already fallen more than 75% from its February peak, and now it sits at a fragile price point. Over 263 million new Pi tokens are about to be unlocked in June, and this could flood the market with supply, pushing prices even lower. But here's the twist: some analysts believe that if just a few things align, we could see Pi bounce back stronger than ever. So is this just another crypto crash, or is Pi gearing up for a shocking reversal? If you care about Pi, crypto, or the future of decentralized finance, you'll want to watch this to the end, because the next few weeks could define Pi Network's entire future. As June 2025 approaches, Pi Network finds itself under heavy bearish pressure, and the price action clearly reflects it. PiCoin is currently trading around 68 cents, a staggering drop from its high of nearly $3 just a few months ago in February. That's more than a 75% plunge, shaking the confidence of investors and leaving many to wonder whether Pi still has a future in this highly competitive crypto space. Now, the price is consolidating in a very tight range between $0.688 and $0.816. When a coin starts moving sideways like this, it usually signals one of two things: either the market is waiting for a major catalyst, or buyers and sellers are at a standoff, lacking conviction to push the price in either direction. And when you combine this technical uncertainty with looming macro and ecosystem pressures, things get even more intense. Let's talk about the technical picture. Every major moving average, whether it's the 10-day, 20-day, 50-day, or even the 100-day EMA or SMA, is sitting above the current Pi price. That's a sign of consistent downward momentum. The RSI, or Relative Strength Index, is sitting at a neutral 43.6. It's not in oversold territory, which could have hinted at a bounce, but it's also not showing any real strength from the bulls. The MACD indicator, as well as the Shan Momentum Oscillator, both continue to flash bearish signals. And to make things even more nerve-wracking, the Bollinger Bands are tightening. That typically means a breakout is coming either up or down. But for now, all momentum favors the downside. This wouldn't be as concerning if it weren't for one major event looming just days ahead. In June, Pi Network is scheduled to unlock 263 million new Pi coins. That's right, 263 million. This type of event often causes a significant increase in supply, and unless there's matching demand from buyers or new users, that supply can push prices lower. Historically, Pi has seen similar unlock events in months like July and August, and each time, there were major corrections. To make things worse, exchange inflows are on the rise. That means holders are transferring their tokens into exchanges, not usually a good sign. When traders send coins to exchanges, they're typically preparing to sell. Combine this behavior with the unlock event, and you have a perfect storm brewing. If Pi falls below 66 cents, analysts are warning that we could be looking at levels around 62 cents or even as low as 59 cents. The key resistance level to watch is $0.7380. Unless Pi can break above that with conviction, the bearish momentum is likely to persist. Dr. Altcoin, a well-known crypto analyst, recently stated that without greater transparency from the Pi core team, the project could see this downward trend continue all the way through August. That's a pretty bleak forecast, but he also added that a recovery isn't off the table. In fact, if the team delivers updates, clarifies the roadmap, or makes significant ecosystem announcements, we could see a bounce back starting later this summer. Other analysts, like those from CoinDCX, are cautiously optimistic. They believe that if buying volume increases and market sentiment shifts, Pi could rally back toward the $1 to $1.20 range. In an extremely bullish case, Pi might even test $1.82 again before the end of June. That's a big if, but not impossible. What would need to happen for that to occur? Several factors: strong Bitcoin performance, clear updates from the core team, improved token utility, and maybe even a surprise exchange listing. Earlier this month, we got a sneak peek at how Pi can respond to external market factors. When Bitcoin briefly surged past $110,000, Pi jumped nearly 10% in a single day. That shows that Pi remains closely tied to broader crypto sentiment and that it still has life left in it. In terms of long-term development, the Pi core team has made some bold moves. They recently announced a $100 million ventures fund designed to support developers building decentralized applications within the Pi ecosystem. The fund is targeted at fintech, gaming, AI, and e-commerce dApps areas with massive real-world potential. The idea here is simple: build real utility, give the coin actual use cases, and the value will follow. But not everyone is convinced. Critics argue that Pi network has grown too slowly. Major exchanges like Binance and Bybit still haven't listed the token, largely due to concerns around centralization and a lack of transparency. And that's not just hurting the price, it's hurting trust. Investor sentiment is also being influenced by governance issues. A significant number of users and developers have called out the project's governance model as being too closed off. The timeline for the full mainnet launch remains unclear, and with the lack of decentralization, many question how Pi can fulfill its promises of being a user-driven, fair currency. This ongoing opacity is making it difficult for new investors to take Pi seriously. Until these concerns are addressed, it's likely that Pi's price action will remain volatile and under pressure. Still, there are some key price levels to keep in mind. If Pi can push past $0.7380, it might signal the beginning of a reversal. A break above that level could send the token towards 76 cents. And potentially even the 0.786 Fibonacci resistance near $0.7586. On the flip side, if Pi fails to hold above $0.688, things could get ugly fast. Traders might panic, leading to a quick drop to 60 cents or even lower. All indicators, MACD, RSI, Bollinger Bands, are currently bearish. The RSI remains below 50 on nearly every timeframe, highlighting that bulls are losing momentum. Volume is low. And without a major catalyst, the price is likely to continue drifting sideways or down. So where does this leave us? Pi Network enters June 2025 at a crossroads. This month could be a turning point or a tipping point. If the core team can deliver transparency, improve governance, and drive adoption through meaningful partnerships, then we might be looking at a comeback story. But if the same issues persist, lack of exchange listings, unclear timelines, and poor communication, then Pi may remain trapped under heavy resistance. For now, all eyes are on the mainnet deployment and whether or not the Ventures Fund can deliver real apps that drive real demand. Because without that demand, all the unlocks and funding announcements in the world won't mean much. If you're holding Pi or thinking about getting in, this is the time to pay close attention. Things are about to move quickly, and whatever happens in June may just decide Pi's fate for the rest of the year. Smash that like button if you found this helpful, and hit subscribe for weekly Pi Network updates. Drop your prediction in the comments. Will Pi crash below 60 cents or bounce back above $1? I'm reading every comment, and I'll be back soon with more updates from the Pi frontier.